Bitcoin, the world's first significant and most popular cryptocurrency, set records this month. Prices soared to nearly $5,900 before falling as much as 9% in the past few days. Bitcoin's meteoric rise has sparked a worldwide debate over the future of digital currency. Here to discuss Bitcoin are three experts. Catherine Wood is the founder, CEO, and CIO of ARK Investment Management. Paul Vigna is a reporter at the Wall Street Journal and the co-author of The Age of Cryptocurrency, How Bitcoin and Blockchain Are Challenging the Global Economic Order. And Lily Katz is a reporter at Bloomberg News. I am pleased to have all of them at this table, so welcome. And Paul, let me start with you. There's been a lot of Bitcoin talk recently, as we mentioned. Sure. Where is it at right now?
Where it's at right now, I'd say it's probably in, oh God, and Catherine, you probably know too, it's probably the fourth or fifth kind of wave of interest of this thing. Throughout its history, it's waxed and waned in terms of the speculative fervor and the attention in the mainstream. This is, I mean, certainly in terms of just price and dollars, this is the biggest move it's ever had. In terms of interest, probably the biggest too. I mean, I don't know that you could say it's totally in the mainstream, but it's much further into the mainstream than it has been.
Catherine, is it still at hype phase?
Well, right now, the market cap, we'd call it network value of Bitcoin, when you include both Bitcoin and Bitcoin Cash, a little esoteric there, is a little over $100 billion. So it's come up, it's come very fast, but it's at a fraction of Apple's valuation, of Amazon's valuation, and we think it's a much bigger idea than either one of those.
And certainly at a small fraction of the overall economy.
Yes, a very small fraction. I think the market cap's like 180 billion. The last time I saw, now maybe.
But changing for all the cryptocurrencies.
For all the cryptocurrencies,
right.
which there are like 1,000 different digital coins, and it was 12 billion a year ago. So it's been pretty wild the last year.
But, the global economy is tens of trillions of dollars worth of value.
Small,
so it's still very
small.
But Bitcoin far and away the most popular.
It's more than half of the total ecosystem at 100 billion.
Okay, so Paul, take me back a little bit if you would. Bitcoin is invented in the wake of the global financial crisis. By and how?
Released in the original white paper, sort of announcing the concept, was released in October of 2008, sort of at the height of the financial crisis, by somebody calling themselves Satoshi Nakamoto. To this day, we don't know who Satoshi Nakamoto really is. So whoever that person was, they had been working on it before the financial crisis. The crisis hits. They released the white paper. January 2009, they launched the software. It's an open source software project. So Nakamoto just kind of put the software out there for the world and let anybody who wanted to adopt it and work on the project on. So he starts in 2009. You know, the economy's in the tank. The financial system is collapsed. The central banks had to pour in and put money into it and save it. And it was kind of, it was geared as an alternative to the banking system. And at another time, I think if he had released that paper and that idea, it might not have taken off. But because he did it, I say he, it could be a she, it could be a they. Yeah, it could be a group of people. There are all kinds of theories. Because of the timing that Nakamoto chose, the thing really took off. First in the sort of hacker, hobbyist, software developer, engineer communities. And then it started to get out a little more, kept growing through 10, 11, 12. And then probably 12 or 13, it started to kind of really step into the mainstream.
And this is one of the most intriguing parts about it, is the speculation over who Nakamoto is.
Right, yeah. Several people, I think, have come out and claimed to be Nakamoto, but we're still their or his or her identity has not been confirmed.
Others have been outed.
Right,
refused it, yeah.
As saying they haven't done this.
Or saying
not
it was.
Nakamoto.
Yeah, no, people have come out and said, this is Nakamoto. And that person says, no, I'm not.
But the idea in the original white paper was like this peer-to-peer cash system where you don't need a third party like a bank. And they sort of conceptualize this world where, transactions are cheaper because you're not going through a bank, and they're more secure because these transactions are happening on what's called the blockchain, which is this shared ledger of transactions.
Which is why the banks don't like it, which is in part why Jamie Dimon famously slammed Bitcoin just last month. They sort of backtracked a little bit, but there's been a lot of discussion.
A lot of discussion. This actually is increasing the public's interest in it. So you have Jamie Dimon, very public figure, very well known. along with Howard Marks of Oaktree and Jim Chanos, all negative. Interestingly, the following week, after Jamie's comment, James Gorman, CEO of Morgan Stanley, and Lloyd Blankfein were speaking about it in a very different tone. And I think it's because they're beginning to see trading opportunities.
Well, they're not endorsing it. They're just saying we're interested in finding out more about this because our clients, Lloyd in particular said this because our clients are asking about
and
it.
There was also Larry Fink, CEO of BlackRock, who came out and talked about it.
Yes.
So you started introducing more folks to it, which leads to the question of, I don't want to get too far ahead of ourselves because there's so much to talk about here, Paul, but it does then lead into the questions of regulation and not just potentially banks and financial services firms being involved, but the government being involved.
Yeah, and that's a very dense topic, actually. We could probably spend an hour on it. But broadly speaking, you have a couple of different moving parts there. One, you have the people working on Bitcoin itself and that project and other sort of cryptocurrencies that are like it. And initially, a lot of them were very anti-government, anti-regulation. The whole thing was designed as a hacker project. We're trying to go around the system and like, let's say, create a network that you don't need these middlemen. And then you started to have businesses come in and say, well, we can build a business on top of this. And if we want some legitimacy, we're actually going to need to be regulated. So they started reaching out to the regulators. So over the last 4 or 5 years, you've had this dynamic where you have one group that is sort of, adamantly anti-government, anti-regulation. Then you have the other group that says, look, we want to build this, we want to bring this into the mainstream. We think this has value for people in their everyday lives. Let's build regulations around this. And then you have just every regulator on the planet is now at the point where they have to figure out what this is and what it means to their economy and how they are going to address it.
So explain this to us then, because Jamie Dimon, was very critical of it, but also did say that he believes the blockchain technology is legitimate. What is that?
Oh, boy, that's another hour.
Yeah, I know, but
so basically the concepts behind Bitcoin, the concepts behind the software have broadly come to be called blockchain technology. And it's just this sort of broad set of ideas that is essentially creating a network where anything that can be digitized could be traded between two people directly. I have an asset I want to give you, let's say a mortgage deed, actually. I mean, you could take a mortgage deed and I could digitize it, put it on a PDF, stick it in a transaction on this software program, send it over to you. That gets time-stamped in the network. And the idea is just that it's a way to sort of, it's like email, actually. It's like trading emails, but instead of just sending an email back and forth, what I'm sending to you and you're sending to me is something that represents value. And that's really all the blockchain is. When you get into Bitcoin versus the blockchain, Bitcoin is this open source, permissionless network that anybody can join, anybody can become part of it. What the banks are trying to build is something that they control.
Yeah, but because it's verified publicly.
Yeah. It's what you were talking about before, like the open ledger. What happens with Bitcoin is every computer on the network has a copy of this ledger, and every transaction gets updated on every transaction gets updated on every ledger at the same time, so that it can be verified. And that process, which puts everything out into the open, makes it all transparent. That is actually what kind of makes the banks unnecessary, because previously you needed a third party tracking all those transactions and keeping the books.
In the original white paper, they talk about proof versus trust. The system we have right now is based on trust. You trust a bank to keep your money secure. This system, this Bitcoin system, is based on proof because you have these computers solving these really complex math problems to verify the transactions.
And it could be a mortgage. It could also be a cup of coffee.
Yes, it could. We're seeing more business to business these days. I think when people think, well, I don't see this happening with cups of coffee, they can't conceptualize it. But there is one way that we have helped our investors conceptualize it. Remember when technology experts said, voice is going to be free one day. And we had trouble understanding that. I don't know. Well, I did back in the day. And of course, today we have voice over IP. What this is money over IP. So voice over IP is free. The transmission of money over IP will be free. Again, like the email analogy there. And then this distinction, blockchain, Bitcoin, when we first started studying, doing research, in Silicon Valley, we heard a lot of companies say, well, I like this blockchain, but I don't like Bitcoin. And we were saying, wait a minute, as we were studying this, in terms of the Bitcoin blockchain, you can't have that unless you build it out and incentivize the miners with the Bitcoin. So you can't separate them unless, in Jamie's case, he wants a walled garden, a trusted network. He doesn't, so it's called permissioned. The Bitcoin blockchain is permissionless.
And the argument on his behalf is that, it's too vulnerable to hacking. It can't be controlled. There's already volatility when it comes to the prices of Bitcoin, to be sure. Right. But those who criticize it say that it's dangerous.
Yes, this was the same criticism we heard about the cloud when it first came about. Everybody said, well, that could be hacked. Well, that's true. Anything can be hacked. But the cloud was an open source system. When you've got a lot of eyeballs watching a system, as we do with the Bitcoin blockchain, and a lot of people's livelihoods and businesses dependent on it, you've got a lot of people watching it from a security point of view. And we're seeing when a hack starts, the news travels really fast and it's stopped. So we actually think the permissionless blockchains are very robust and very secure relative to the permissioned ones.
I think the real argument isn't even that it is vulnerable to hacking or phishing scams. I mean, everything is. And you look at some of our existing network architecture, that would use some techie terms here, right? I mean, look at all the hacks that have happened. Look at Equifax recently, Yahoo recently, Target, the systems that we have built up over the last few decades are extremely vulnerable to hacking. Hacking is not the real argument against Bitcoin. The real argument against Bitcoin is that it is a system that authorities cannot control. They don't control the money in it. They don't control who's using it and what they're doing it for. And what regulators have to figure out for themselves, somebody like Jamie Dimon doesn't want that because, frankly, that cuts into Jamie Dimon's business. Mm-hmm. Regulators need to figure out, is that something that we can have at least enough control over that it is not going to destroy the economy, that it's not going to upend the economy, that it's not going to upend the government, that we can collect taxes on it? Or, are we willing to accept some amount of, for better or worse, dark net type transactions? Bitcoin is a relatively anonymous currency. Cash is a completely anonymous currency. So there's a lot going on right now. Like I said, this is in its infancy, and there's a lot to be figured out in terms of what this is going to look like.
And it's not just money; it's a technology. So
right.
you've got three forces coming together here. You've got financial services, and the regulators don't want to impede the technology. They don't want to be accused of preventing the next internet. So they're stepping lightly, and we're even seeing very recently, actually within the last week, the SEC and the CFTC beginning to agree on what Bitcoin versus other crypto assets are. Some should be regulated by the SEC, and some should be regulated by the CFTC, the Commodities Exchange. And the other thing that we see going on from a regulatory point of view is a fear on the part of regulators in the developed world that they're going to prevent innovation, so they're stepping lightly.
So what do you say to the investors when they look at the volatility, going from, what is it, near 1,000 or so at the beginning of this year, mm-hmm. all the way up to close to 6,000? Mm-hmm. In the span of 9 or 10 months, not the first very dramatic swing up or down that's happened. You don't think that's going to end anytime soon?
We're as I mentioned, we've sized it. It's about $100 billion for Bitcoin. That is a very small market right now. It's captured a lot of people's imaginations. We are going to go through hypes and then shakeouts. Hypes and shakeouts. There will be regulatory news. There will be hacks. All of these things have already happened. We call this anti-fragile. It's being battle tested almost every day. China banning it. Russia banning it. These are all tests that Bitcoin has gone through and actually dips and then comes right back. So it's in a bull market.
It's so resilient is the interesting thing, at least in the last year or so. You had it split into two different currencies. You have now Bitcoin and Bitcoin Cash. And people were really scared before this happened, and the price of Bitcoin dropped, and then it bounced right back up. And then China banned these initial coin offerings, and then it bounced right back up. So
is the big question right now how long the battle testing happens before it settles, Paul? Is that?
No, because I think that is going to continue for, until Bitcoin is at some, assuming it gets to some place.
I'm not saying that'll happen anytime soon.
Right. No, that process is going to go on for a long time. And I think when you talk about the price, especially, I think there are a couple of things. Yes, it's extremely volatile, but there are people who actually love that kind of volatility, and they're called traders. And they, a lot of Wall Street traders are interested in this now because it is volatile, because you can make money trading it. And the guys who are Bitcoin traders who have been doing this for a long time, they are total, keyboard cowboys. They love this thing. They stay up all night and trade it, and they don't care if it goes up or down because they just want, they're just looking to make some money off it. So, part of Bitcoin's attraction to that group is the fact that it's volatile. The other thing I think it's important to keep in mind, too, when you're talking about the price is that this is still a very small group of people trading it. And most of them are really true believer types. And a lot of them are just buying it and holding it because they think it's going to 10,000, 50,000, whatever price. So in some ways, I really think that Bitcoin is a one-way trade. It's a lot of longs in there. There's not a lot of shorts, and there's not a lot of ways to short it. So to some extent, I think the price is, it's not like a mature market. It's not like stocks, where if stocks are going down, it means people are selling because they think that there's something wrong with the company. It's not quite like that yet.
Actually, we've done a study on the volatility. You can measure it. If you do it on a 12-month moving average basis, now I know that's you will see that it had come down quite significantly. We compared it to the Twitter's stock price. It actually dipped below that and dipped below gold's volatility last year before this next run up. So the volatility has, compared to where it was in 11 and 12, 13, has come down quite significantly, though it is volatile.
Which is the natural progression of things, one would think. So, Lily, what's the difference between buying and mining?
So buying a cryptocurrency is just literally paying money to have a digital coin. Mining is a process, I like to think about it of like people sitting in their basement on a computer, and it's called a mining computer, and you're having the computer run all these very complicated math problems to verify the transactions that are happening on the blockchain, to digitally timestamp these transactions and make sure that there's no double spending happening. So you can think about it like if you have someone counterfeit a dollar, they can spend it in two places.
So talk to me, if you would, about the fees then associated with cryptocurrencies and Bitcoin in particular.
Because we're in the public markets and we can only buy financial securities, there's only one way we can gain exposure as a registered investment company to Bitcoin, and it's only Bitcoin we can access, and that's through an over-the-counter security called GBTC. So we're just trading in the stock market, effectively, that does trade over the counter. You may know more about the fees.
But if
jump on that one?
Yeah,
so the fees have changed over time for Bitcoin. One of the biggest debates recently has been something that people call the scaling debate, and basically people are concerned that Bitcoin transactions are getting too expensive and slow, and that is actually why Bitcoin split in two, was these two sort of rival camps couldn't really come to an agreement. And there was a lot of argument about the high fees and the slowness of the network. So they moved some of the transactions off of one network, basically.
But if I'm buying a cup of coffee for a couple bucks, and if I pay with a credit card now, MasterCard or Visa is going to take a couple percentage points from the vendor, that is, right? American Express is going to take more.
Yeah.
Where is the money going? Obviously the money's going to Starbucks or wherever you buy that actual cup of coffee. Who else is taking?
When we're talking about the fees, what happened with Bitcoin is that initially when it was designed, one feature of it was that there was a fee. Everyone thinks Bitcoin transactions are free. They're not actually free. There's a very small fee associated with it. That fee goes to the miners. It's part of their reward for processing transactions. In the early days, the capacity of Bitcoin to process transactions is capped. How many it can do per second. It's just a design of the network. In the early days, the transactions were so small that it didn't matter. And that fee, which is a voluntary fee that I, as the transactor, would offer the miner, you didn't have to offer them anything because there was no strain on capacity. What had happened, especially this year, is because there were so many more transactions, you were starting to get bottlenecks. And what people were doing was they were offering higher fees to get their transactions put to the front of the line.
Some countries are embracing it and some are just banning it.
Yeah. Absolutely.
Including China.
Yeah. China seems very anti-Bitcoin. Russia.
South Korea, right?
South Korea North Korea is not, although North Korea might be stealing it. South Korea is starting to embrace it. Over in Europe, they're pretty pro. Switzerland's very pro. The UK actually is really interested in it. So, the U.S. I think we're pretty positive on it. When you talk to regulators, you talk to government types, they see that there could be some value there and something they want to help build out. So you're right. I mean, every country kind of is at the point where they're trying to come to grips with it.
And they're dealing at it from 2 points of view, monetary policy and power that way. I think that's one reason China did it. This was a way to get capital out also. So they were trying to control that. So the regulators are thinking about policy, monetary policy, and capital movements. But the technology is where they have to do a double take because they're saying, wait a minute, if we ban this, then we're banning this potential engine of innovation like the internet was. This is where the World Wide Web was in the early 90s. Do we want to do that? No. And so you're seeing, especially in the developed world, just a very careful analysis before they. It was interesting, Christine Lagarde of the IMF, she believes it's going to be extremely disruptive and came out saying so a few weeks ago because she, during 08-09, gained such credibility for calling a spade. I think a lot of people sat up and took notice.
Cryptocurrency, many more conversations to come. Catherine Wood, Paul Vigna, and Lily Katz, thank you all very much.
Thanks.
Thank you.
Yeah.